BSE stock price. You've completed almost a year, 4th Jan, 1 year, and let's look at the BSE stock price in last 1 year. Change of guard, we always say that is what markets get excited about. In this case, I guess it's before you could finish the word magic, magic has happened to your stock in last 1 year, right? Let's look at the BSE stock in last 1 year. 300% return, 3 guna ho gaya. Are you feeling happy, excited that markets are or shareholders are endorsing your leadership?
The stock price is a culmination of demand and supply in the market, which comes from what market perceives as what currently is happening and what in future it is going to happen. From a stock exchange perspective, it is more like a ladle in a big pot of kheer. The ladle does not know the sweetness of the kheer. The job of the ladle is to distribute it. Whether it is sweet or not, the consumers decide. The same way we are doing what we are required to do as in charges of stock exchanges, and the purpose for which we have come, that is to make BSE vibrant with the able guidance of the market and the regulators, and probably the market is finding it okay that we are doing the right thing. That is why the prices are going up. That is the way we look at it.
They say in economics that there is one person who has right to win and the other players, they tend to get marginalized. That really was the big picture opinion when it comes to the Indian stock market exchanges. But you've changed it, you've tweaked it. You've gained the market share back in derivative market. Your distribution platform in a sense is now accounting for almost 20% of your total revenue. Was that a conscious strategy where you wanted to regain the market share back in the derivative market?
It is just not the derivatives market. The strategy was to make BSE vibrant. When we talk about BSE vibrant, people used to ask me, what do you mean by that? To have a meaningful presence in all the areas where we are currently present and we are not being looked at as meaningful. That includes cash, derivatives, currency, debt, SME, everywhere. In SMEs and mutual funds, we were actually having our presence felt a bit. In all the other areas, we are not. So the effort is on all the 3 areas to make our presence felt. And I feel the market is really big. And I therefore feel it's not a question of only if one person has a right to win, there will be no other people who can coexist. I appreciate what you said, that it is a paradigm which was probably thought about at some point of time. Our idea was to prove that there is more space for people, there is no need for competition. Actually, if you are able to provide a product which is complementing each other, that itself would pave the way for coexistence and continuous growth. Actually, that is what we have proved, I feel, to start with. We have a long way to go, of course.
There is a paradigm shift in how transactions are done. When I was a child, I distinctly remember my uncle used to come to Dalal Street and used to tell me stories of the outcry system, the ring, the badla, everything was different. Then came DMAT, and now it is high algorithm and so-called internet brokerages which have taken over. But with each paradigm shift, the brokerage charges are coming down. With each paradigm shift, the market has started expanding. What is next in terms of a paradigm shift for exchanges, which could be a blend of technology and growth?
No, it's a very wonderful question that you are asking. From a place called the ring, first the trading shifted to the office of the brokers.
Yes.
Then it shifted to the office of the investors in the form of a CTCL package where there is a web based trading or whatever it is. And from there now it has shifted to the pockets of the investors in the form of mobile trading. If you want to today commit a SIP, you do not have to go anywhere. With your mobile you can make a SIP done. So clearly technology has aided it. When you are talking about as next stages, there are a lot of new technologies that are evolving. I think it is time now to use many of these technologies in increasing and improving the safeguards that we are providing to the market. If you, I am not sure how much it is going to happen, it is a wild thought for me. If you look at it now, artificial intelligence and machine learning is improving in a big way. When today if we were to look at it and can we see patterns and have any surveillance concerns that can emanate, well told to us in advance so that we take measures, possible. And look at it this way, huge amount of data crunching has become very easy now with lot of machine capability. When we are talking about the number of investors growing, the investment pattern, what is that will be suitable for which investor? A targeted type of an investor education. Today we are carpet bombing. We are going and thinking that's what the investor would like to know, and we are teaching them that. Maybe we are teaching correctly, we are not teaching correctly, because that's not what he wants to know. So maybe an analysis of the data analytics could help in clearly targeting, oh, this type of a group in this place would require this type of a investor education so that they'll be safe. It is possible. So these are all wild thoughts. They may materialize, may not, because time will tell you how much your thought has been in the right direction. But I feel this is going to grow. In the last 30, 40 years, we have seen a paradigm shift in a big way from where we are to where we are today. I think this is going to continue to happen in India with the type of growth we are looking at.
So looking at the crystal ball, 5 years from now, what could be the size of Indian equity market?
Honestly, that is a very difficult question to answer. I'll tell you why. 5 years down the lane, nobody will see. I'm going to quote a sentence from one Hindi movie which I recently saw.
You saw Hindi movies, sir?
I see, of course.
Okay.
वक्त बदलने में वक्त नहीं लगता है.
You saw 12th Fail.
Yeah. वक्त बदलने में वक्त नहीं लगता है. So 5 years is a very long period for anybody to predict. If you look at it, what is in the next 1 year, next 3 years? Of course, 2047 tak, we as policy makers find the country nicely thinking as to what the market should grow. And the policy orientation today in this country is clearly taking us towards that. But that's a policy maker's orientation, so they have every capability to do it. For a person like me who is just a CEO of a stock exchange, to see 5 years crystal ball is difficult. What I certainly see is in the next 2-3 years, the number of SMEs that are coming in, the penetration what was talked about earlier on about the equities market and the equity culture and safe investment, debt instruments seeing something bigger, and some retirement product, which is just today only we have the NPS. We require more retirement products. I think all of this will be coming in very soon from a stock exchange perspective.
You know, given that we're on our way as an economy to become a $5 trillion economy, how are you looking at the overall penetration of demat accounts, and what do you believe will be the factors that will lead to a further rise?
No, it's a very good question that you have asked. The penetration has already started happening in my opinion. I'll tell you why I am feeling this way. As of December 2023, there are 9 crore PANs which are trading in the Indian market. Around 40% of them have gotten registered into the Indian market in the last 3 to 4 years. If you look at the profile of this people who have got registered in the last 3-4 years, it's very interesting. While Maharashtra and Delhi may be a bigger state contributing to the pie, but the growth is not contributed by Maharashtra and Delhi that way. It is being contributed by by states like Uttar Pradesh, Chhattisgarh, Bihar, Punjab, MP, Rajasthan. If you look at cities, no, it is Agra, Varanasi, Indore. These type of states are contributing much more. If you look at the profile of the population, around 80%, 75 to 80% of this increase in PAN which I am talking about are under 40. Around 40% of them, around 40% of the increase is less than 30. Young India, which is now having access to digital knowledge, easy access to information, online real-time free information, a wonderful regulatory atmosphere where investor protection is very important, and a very stable development-oriented policy regime. With all this, the penetration is wonderfully happening. People like us, what we should do to further it is, as I said, go to a targeted place, talk about for example, if we see in some place there is a wealth creation happening, but not enough of mutual fund investments happening. Go there and tell, look, you know what, you all are creating wealth, maybe you should consider mutual fund investment. And the way in which if we could probably think about making debt instruments more popular, if every Indian could hold say 10 units of Government of India bonds, I think it's a great thing to happen.
Okay, BSE has, it is just not an exchange, it's got other platforms also, you've got other investments also. Star MF, it now has about more than 30% market share approximately.
Much more than that.
Much more than, I mean, in terms of the total aggregate kitty institutional put together, more than 30.
Correct.
How do you see the entire mutual fund distribution industry moving? That's where disruption is happening, that's where fee is coming down, and that's where commission structures will get challenged because of technology in AI.
Yeah, see here, the regulator, madam, has already clearly expressed her vision. The SIP should be 250 rupees. So that is the direction. Why it is very important? Today, if we look at it, the number of women folk getting into the market directly is still lesser compared to the men coming in. Women are capable of providing a stable type of an investment atmosphere. So, how do we unleash the Nari Shakti? So, that is going to be very important for mutual fund growth. And second is catch them young, is what we always talk about. Every college student who is going to just come out of the college, that is the right time to go to him and tell, you know what, at some point of time you are going to have a family, you are going to get married, you are going to think about your school children, education and other stuff. Start investing in SIPs. So, that could be a very big and important game changer, specifically targeting the youth and women and talking to them about mutual fund investments and propagating it is, I think, a very important thing to be done, and that will be the next step in my opinion. Once it happens, the menfolk of the household will automatically start looking into it, and there will be an overall healthy atmosphere of considering a long and stable investment which is not looking for returns tomorrow and today, which is looking for investments return over a period of time.
So I'm just going to come back to BSC, and it just resonates so well with us. It's not only India's oldest stock exchange, Asia's oldest stock exchange. Is that banyan tree story true, sir?
That's what
that
I have
the
heard.
Stock market started outside a banyan tree.
Under a banyan
That's what
tree,
I have
yes.
told. That appears to have been in the Horniman Circle. It was in 1875 Native Stockbrokers Association. And incidentally, from July 9, 2024, the 150th year will start, which is a big landmark from the time 1875 when National the share brokers formed as an association, and Native Stockbrokers started an association. It's a matter of pride for all of us as Indians that we are one of the oldest countries in the world to have thought about a stock exchange and put in place that.
No, oldest stock exchange, GM utilized, fastest. I mean, one of the reasons I always tell people is that if you compare India and other emerging markets, you got to respect the regulator and the exchanges here, the kind of openness and the kind of transparency what you have. It's very easy to invest in China, but it is extremely difficult to just, take your capital back from China. I mean, that's unfortunately the entire way the framework of the capital market there is structured. Now, we are in January 2024. You say that we cannot predict what will happen next. But as a CEO, I'm sure you're planning as to how things would move for BSE for next 3 to 5 years.
Yes.
Your current revenue stream is 25% is coming from BSE cash equities. Mutual fund processing in that mix is about 10%. Fee-based income is contributing to a very large income in terms of treasury and fee-based income, 25%. 3 to 5 years, do you see the large revenue pie of BSE changing? If yes, in which way you think it will move?
I need to be very honestly putting across to you our thought processes in this. We as a regulated entity and also a first line regulator and performing the role of an MII, when we talk about strategy or future, we do not look at it from a revenue perspective.
Okay.
Because now we feel revenue comes on its own when you do things right. What is right is what is good for the economy. So if you're talking about next 2 years or 3 years or 5 years, the roadmap will be as my thought process emanates. See, first year it took for me some time to land on the ground and find my feet and start getting moving. I think that has happened now. 1 year is over now. This year onwards, the concentration will be on SMEs, debt and mutual fund. They may not be revenue spinners, but they are very important for the economy. If you look at SMEs, they are the backbone of the Indian economy. It's very important to bring more and more SMEs to the fold in a nice, transparent way. How good SMEs can come to the platform so that they can find it easier to raise capital and grow. More and more companies should come there. That should be our endeavor. That is one important thing. In the next 2 3 years, that would be our endeavor to grow it. Next is the mutual fund, which we talked a lot about, how to make the penetration better, how to make every individual household Every woman thinking about if she has some spare money, how she can put it into mutual fund. If it's a young boy, he got a pocket money from his father and which he has not consumed anywhere, how he can think about putting it in mutual fund. That will be the thing. And debt is very important. We do not have a we need to have a very nicely developed interest rate curve in India, because that will pave way for multiple interest rate products which will be helpful for corporates when they grow in size in India. So it's very important to develop debt market, and we should do all the things that are possible in two areas, government debt and also corporate debt. These will be some of the important thought processes. Last but not the least is social stock exchange. So we need to engage ourselves into the social stock exchange area, how we can encourage through a centralized mechanism people who want to give back to the society. They need not be big. Don't we all feel that when we are walking on the street, suddenly we are happy, we have 50 rupees in our pocket, we find somebody needy, don't we give it? That's the way social stock exchange should be. Anybody wanting to give back to the society should have a platform where they will be able to come and donate and say, look, you know what, this is my small contribution for the society. How do we enable it? What should be the structure? These all should be the areas where I think as MIIs we all should be thinking in the next 3 to 5 years.
A lot of believers and old-timers of BSE are saying that, okay, the definition of Bombay Stock Exchange is that it is the oldest stock exchange in Asia, but suddenly it is now moving like a fintech, both in terms of technology, adaptability, and the kind of revenue streams they are holding up. So do you think, while we may think BSE is old school, but in terms of an adaptation, it is now working like a fintech? It's very nimble. It is investing a lot in terms of technology. It is making speed as its unique USP. And then again, if I look at the platforms which you're developing, pretty much you're building up a distribution model. So is BSE a fintech now?
Whether we accept it or not, every stock exchange, every MII is a fintech.
Okay.
It is dealing with finance and it is a technology company. So the moment you start thinking that you are fintech in that perspective, you will be innovative. You will be trying to find areas where we need to be continuously on the run. I think not only BSE, everybody in this country need to be adaptable to changes, looking always forward to see how best they can put their best foot forward and be nimble. I think that's a reality.
Okay, so hold on to that thought. Lots more to talk about. We're going to take a very quick break. But when we come back, we'll exactly talk about as to how exchanges can grow businesses, what's in store for the mutual fund industry, how is it that mutual funds can now only increase equity participation and penetration forward, and who better than Radhika Gupta, MD and CEO at Edelweiss Mutual Fund, right after this short break.
Forward with our guest editor, Mr. Ramamurthy, and joining me now is one and only Radhika Gupta. Hello, are you in studio?
Thank you.
Nice to see you. I haven't met in a while.
I know, and it's nice to be in the studio.
Yeah, you obviously know each other.
Of course,
Of course,
we do.
yes.
So what are we talking?
Naturally, with Radhika, we will be talking about more mutual funds and the Indian economy
Thank you.
because of her specialization.
Absolutely. And how it's now become easier, like, you know, we were earlier highlighting, to participate into the entire mutual fund schemes, right?
Yeah, it has become much easier today for anybody to participate. It's all in mobile. I'm sure Radhika will be able to throw more light onto it. What are the efforts that you have taken to ensure that mutual fund, particularly in your case, the penetration improves and more investors are able to access your mutual fund?
So firstly, I think we're having this conversation at a great time because we just crossed 50 lakh crores as
Yes,
an industry. So we've got the half century mark. We now need to work towards a century. But I think, you know, I keep telling people in the industry that we're probably working at the best time in the industry, because today there is awareness of mutual funds. And I think Mutual Fund Sahi Hai is a landmark campaign. Nowhere in the world, in most industries, do you see competitors come together to pool money to do an investor development program that has continued for many years. And I mean, I have views on how you can extend Mutual Fund Sahi Hai, but awareness is there. Like, I did this experiment on the sets of Shark Tank with the crew. You know, lots of people in the crew, cast, people who drew dress. Yeah, how many of you have heard of the word mutual fund? 60% of people raise their hand.
Not bad.
Now, if I say how many of you have heard the word SIP, then even more people raise their hand, because most people think SIP and mutual fund is a different thing.
How about one saying thank you to media?
Yeah. Thank you. Thank you. Thank you. It's all you. It's all you. Thank you, media. The opportunity part is, though, if you ask how many of you have done an
Actually
SIP,
done it,
that
yeah.
is 10-20%. And then to his point, though, I remember actually opening up SIPs on that set because it's become so easy to do that. So digitization has made it 2
At your
minutes mein
fingertips.
you can get
Yeah.
this done. And so that's why I think it's the best time to work in the industry. 10 years ago, explaining a mutual fund was a pain. Maybe 20 years later, everyone will have a mutual fund. So we are actually working in the golden period.
But how do you increase that 10% to even a 50%? How do you get people to actually make that investment and, get an SIP?
I think there are two things. One, I think we haven't explored the Young India opportunity enough. If you look at Young India, which is your millennial plus Gen Z, it is half the investor base in this country. And by the way, 80-90% of them prefer equity investing. So we are doing a lot as a brand to think about Young India. Young India is mostly hanging out on social media. So like it or not, your kid is going to make decisions and get influenced by influencers and people there. We have 12 crore crypto accounts in this country, many more people on online gaming platforms. So there's something to learn about how they're marketing. So I think Young India is a little bit of a missed opportunity, and we have to start speaking the language of Young India. I think women is a missed opportunity. Finance is still very technical. Most people's worry is, yaar, मैं कैसे शुरू करूँ? And we have
समझ
to,
नहीं आता.
and we have to position mutual funds as simple problem solvers. All this, nobody wakes up thinking, I want a flexi cap fund today. I want a large and mid cap fund. People don't know what these things mean.
नया कैंपेन आइडिया देता हूँ.
क्या?
नया कैंपेन आइडिया.
Actually-
म्यूचुअल फंड इजी है.
म्यूचुअल फंड इजी है.
That's a
कौन
good
सा
idea,
म्यूचुअल फंड सही है? Most people don't know in 4,000 schemes how to get started. So how can this? Most people think I want to save for my son's education, just like we were talking, Nikunj, or I want to save for my daughter's marriage or something. They don't wake up thinking large, mid, small cap. So we have to repurpose these things as mutual fund can solve my problem. SIP se hoga.
Mr. Ramamurthy, there's this whole old school thought, right or wrong, I don't know, but I've seen that when the generation has changed, the interest in stock market has come back. There are these not very great memories I had when my father used to tell me about what happened in 1992, what happened to a US 64, and then what happened in 2002 after the TMT meltdown. Do you think somewhere that is the messaging which is the most critical messaging? Because that happened because that time the regulations were different, the exchanges were different, the transparency was different, and in a sense the system was very different. So now those things, now you have a market risk, you don't have a risk in terms of a collapse of the system.
That is one important point. As I told you, two important drivers there. One is a development oriented policy regime, and consistently giving a development orientation, which you have seen in the recent past, is a very important contributor. The second is a very robust regulatory regime which concentrates so heavily on investor protection and investor education. If you look at it, for an investor, see, you talked about the earlier times and the fiascos. If you had the opportunity of going into a ring, the age of people who were getting inside the ring and coming out, if you have seen, it would have never been anything below 50 to 60.
Wow.
Today, if you look at the people who are participating in the market, whether it is a broker's office or whether it is an investor, the age is very less. Radhika made a mention of that, and I made a mention about the age profile of the new investors who have come in. So that itself makes very different approach towards investing. It is no longer somebody giving you a tip. People today want to read and understand. Well, by way of reading, they may read a tip which may be good, bad, ugly. That's a different issue. But knowledge is available in a digital media, in a about finance, which makes it easier. And I think that has been the important hallmark and the difference. Three things therefore. One is, of course, digitalization. First is a very strong, robust, development-oriented policy regime and a very wonderful regulatory regime. I think these three have been contributing for the growth of markets.
Yeah, but as we're discussing this topic, then let's also bring on board our next guest, Harsh Jain. He's the co-founder and COO at Groww, which is a financial services platform with mutual fund stocks, ETFs, IPO, etc. Good to have you on board. And Harsh, we were just discussing in our studios, talking a little bit more how to increase the interest in SIPs, mutual funds, etc. A lot, of course, has been done, but what more do you think needs to be done, especially to tap into the next gen?
Yeah, thank you so much for having me. Hi, Radhika Sundaram. Uh, Good to be here. So yeah, mutual funds. I think so. We were party to the last 5 years. We have seen the scale has gone up significantly. In fact, this month we would have done 1 million new SIPs, and if I see last year same month, it would just be 3 lakh, 4 lakh. So the scale is growing, and I think the whole awareness, the need of why they should do mutual funds, why people should do SIP is significantly growing. But the few segments, definitely there is still penetration growth that is possible. Youths are coming, but segments like minors, people investing for their kids are still. If you see people in the age of 35 to 45, 50, they have kids, but then there's not a very simple, easy way of investing for the minors. And I think Radhika, I just listened. She mentioned about the whole women, participation in the industry. I think that can also that has a scope to go up. While whether it's a simplicity or it's just a inherent friction or it's some more different level of awareness, but the needs to be solved, and it's getting solved. It's just a momentum that will drive automatically, because a lot more the last 3 4 years we have seen one momentum towards the capital market, towards the mutual funds, and now we will see the next people who are sitting beyond, like farther from the fence, will also start getting to fence. In another decade we will see probably 40 50% of the population having folio in their having a folio active in mutual funds.
In fact, we have, yeah, Mr. Sundararaman as well, Harsh. And I just want to get him into the conversation, the MD and CEO at BSE. He also would like to make a point to you. Go ahead, sir.
Harsh, you yourself are part of the next gen, and you were part of a new revolution in terms of making it easier for people to invest in mutual funds in a big way. How has been your journey in doing that, and what do you think will be your future roadmap as to how you will be taking it to those two important points which you mentioned, which all of us all have it very close to our heart, taking it to the Nari Shakti and the Yuva Shakti and improving it. What do you think will be your views on that? So 2 points. One is, what has been the experience in your journey, and what do you think you will do for taking it forward?
Yeah, sure. So I wouldn't say it is easier. I would say it's simpler. And the difference is that it is still, putting your money and investing in a capital market should not be easy. It should be simple. The processes have now become way simpler, way transparent. Now people can see what they're investing into. All that information that traditionally used to come from some agents or some people, now they have an alternate. While there are still a lot of investors who are investing offline, the significant number of new investors who are coming online on the mobile, consuming the data from different sources, making their own choices. So this trend has been the reason why we've seen the growth. And I continue to, see that this will now shift to a next segment also, while the younger ones are getting to a place where they have disposable income now. Yesterday I was talking to somebody, and then the person mentioned that mutual fund is new fixed deposit. Everyone wants to, if there's some money lying in the account, they would want to invest in capital market or in the mutual funds. They want to do SIP. So that level of demand has started generating. And I mean, obviously we helped. We realized that the biggest problem was the transparency, because people were doing it in a black box, and we opened it up. We and like a lot of people like us who started along with us, we try to make it transparent. Like, okay, all you can see the details of the each scheme. You can see what the expense ratios are, who's the fund manager, what the performance has been, and you make the decision yourself. So you feel confident. You feel that you're making a decision for yourself. So that has helped significantly. I think there was a gap in content also, because there was initially done for and by the people who understand deep finance. And yes, it's a finance problem, but at the end of the day, it's a consumer who is supposed to make a decision, right?
Sure.
We've seen a lot of these to be solved from the financial, how the trends of economy, how the global US debt and everything is going to impact. But when it comes to an end consumer who's probably running a Sherwani shop in Kanpur, or working in a government job, or doing his own small startup, these people need to know what is it for me and how do I do this. And when it comes to mutual fund, the regulations are so, I mean, so forward thinking that right from the experience of KYC to the standardization of schemes to the, all the regulations around the AMC itself, how do you manage the fund, are so beautifully designed to protect the retail investor that
True.
investor doesn't need to worry and need to really look into the depth of the financial. They just need to know, okay, if I want to start investing, there are some small standard funds. I can start with it. And over time, I'll increase my portfolio.
Right. You know, Radhika, I want you to come in here because Harsh made such a valid point, and I think it stayed with both sir and me, that mutual funds are the new FDs for, most of our, even 18 our young population. They've never invested in FDs. Mutual fund is their first go-to, sort of fixed investment or, investment that they're completely sure of.
I think it's a couple of things. One is, as he made the point, in mutual funds now, you can lose money because market goes up and down.
Of course.
But, nothing is going to go wrong. And in that sense, you have that stability and confidence that a bank used to give you.
True.
But I think today's youth is a lot more aspirational. I was reading a statistic that 65% of young people in India now want to do a startup. 50 years ago, when my father joined civil services, people wanted a permanent job in this country.
Sarkari naukri.
Sarkari naukri. I mean, I always joke that once upon a time, Mother India had a song that said, "Dunya mein agar hum aaye hain, to jeena padega, jeevan zahar hai, peena padega." Today, this youth is the youth that says, "Kaun kehta hai, mujhse na ho payega, apna time aayega." So India's generation has made a shift. And as you see all this development happening, you also wonder, how am I going to participate in this growth? I think this government has done a fantastic job of marketing India.
True.
Also. And the youth sees that, and you want to participate in that growth. And an SIP has also made it very democratic. It's a product that treats a 100 rupee investor the same way as a 100 crore investor, which is not an easy thing in India, by the way. You get treated very differently in India if you have a 100 crore net worth versus a 10,000 rupee net worth, but not in mutual funds. We treat you the same way. And I think that is what is catching fancy. I have got called SIP wali auntie, which is an auntie I don't feel great about, by an airport security guard who told me, "Madam, I've seen you. You are one of those SIP wali aunties.
At least they're watching, right?
At least they're watching.
Yeah.
So it's a good reputation to be called as BSc wale uncle.
It's not bad.
Maybe they will call me BSc wala granddad.
BSc wale, nana.
And maybe our young gun here also, Harsh, I wonder what he would be called.
Bhaiya. But just to understand one product which Radhika mentioned, which is the startup. And if I look at the startup, it's culture, it's not a fever. Startups and the startup entrepreneurs are coming from cities and from towns which perhaps are difficult to even find on the map of India. It is so inspiring to say that how the young India is changing. So from really an exchange standpoint, you came out with an SME platform, which has done wonders. And now SMEs, they can actually go to the capital market, and I've seen such fantastic SMEs raising 50 crores, 3-4 years, they migrate to the big board. Such a nice culture of innovation which is coming in. Do you see that sooner than later, there really could be a startup exchange? There could be an exchange which will actually be doing something on startup?
Already there has been some effort made by BSE in this regard. There is something in existence, but it has to get into the next level. See, it is a question of how much you can dream, right? Look at the way we have grown. Till few years before, we all used to be worried about how many milligrams or kilograms of sugar we will get in our ration card per person. We are from that zamana.
Generation.
425 grams of sugar per person per month was the area from which we are coming in. Today, that is not what is the problem for the youth. So they are able to dream. As Mr. Kalam said, President Kalam told, dream is one thing which will never let you sleep, right? So there are a lot of dreamers today in India. And I'm sure more and more when startups come, there will be more and more growth in that platform which we already have as for startups. It is a question of how we take it to the next level and how we grow on it.
One more follow-up question. As India will grow, more and more global connectivity will grow. If I look at global exchanges, there are a plethora of global international products. Sitting in US, you can perhaps invest in the whole world. You can buy derivatives. You can hedge your portfolio. As India migrates from being a $4 trillion to a $10 trillion economy, we will become a large economy. Do you see exchanges like BSE moving into different offerings, different global products, different way in which how global investments could be structured?
There are three parts to it actually. It's a very interesting question that you have asked. whether the infrastructure that we are planning today is capable of supporting global trading. That is the first question. The second is whether there is an appetite for global products in India at this point of time. Third, whether the exchanges have talent to package global products into Indian requirements. So these are the 3 points which I think will immediately come to my mind. In terms of the first question, we are ready.
Okay.
24/7 if we have to cater to the market requirements with no break.
No, sir. Market itna mat kholiye.
No, I'm not
have to cater.
Sorry, no, I'm not talking.
You're 24 by 7. I love it. He's just imagining himself 24 by 7.
I made a wrong start. I'm not talking about extension of market hours. I'm talking about infrastructural capabilities. They are two different things.
But coming to that, sir, you think that's happening?
No, I have no views on it. I have no. I am a ladle.
Very diplomatic.
I am a ladle. I give what is there in the pot to people who need whatever.
And it's
it
not
is.
there in the pot right now.
Not in my pot. It is there actually. So if the market wants it, then I put it in the pot.
Market wants?
I have not been told. I have not been told.
They now leave a sigh of relief.
Yeah. So from an infrastructure perspective, we do have an infrastructure capable of any amount of traffic, any number of times in a day, total day, whatever it is. That's one part of it. As far as the global products, there was an effort made quite some time before when I used to work in NSE on bringing in S&P 500 and Dow Jones futures and options into India. Maybe it was very much ahead of times. It did not work at that time. At some point of time, people will find it worthwhile to get into global products. Today, Indian products are getting more returns. You look at it, 11% return last year from India, 6% from US, 3% from China. Naturally, people in India will be feeling very happy to continue to be investing in India. So the demand has to come. The third is the exchange certainly has knowledge capability to package things which are global products for local requirements. So two of them boxes are ticked. The middle box where what is the requirement from the market? I always call it as voice of customer. That will demand how the remaining two are get to be used.
So for me, this engaging discussion gives me one punchline. Exchanges are not increasing the time anytime soon.
I have not made any such statement. If that's what you want to infer, you are absolutely free to infer.
Nikunj doesn't want to age before.
Nikunj still wants to be part of young India.
I like to feel like that.
There you go.
Like they say, 40s is the new 30s.
Correct. I
You
just
know,
don't want to.
sorry to cut you guys, but the only catch here, Radhika, is that the kind of wild move that you've seen in the market from those COVID crash. First you had those Robin Hood traders. Just about everyone was in a trading app, sitting at home, just tracking the markets, buying anything, and it gave you great returns, right? And then on a daily basis, we're seeing the market scale up new highs. When the market is going to be in a downturn and nothing rises up in one way, what happens then? Because this entire new age population which has come to market, it's coming back to market mostly out of a FOMO feeling. Nothing else is working out. And
not seen a
very
bear
few
market.
will have the gumption to stay put.
Yeah,
to
that
stay
instant
invested.
They've not seen a bear market. In
Exactly,
fact, there
yeah,
was a
right?
day, I think a few weeks ago, when the market fell 3% and there was panic on social media. And I said, I'm a child of 2008. That was my first correction when I was 24. But I think every bull cycle brings some irrational behavior. The people who are buying micro caps. I mean, I had an investor come up to me and say, Madam, micro cap ka ek fund le lo, roz आधा % milega. You'll get 0.5% a day. And so these are wild expectations. So you have a set of that. You have a set of people who are dabbling in F&O, even though the regulator says you're not going to make money.
Yeah.
But on the other hand, since you want to look at the silver lining, you've also had an SIP book that is at 17,000 crores. And you do a 10-year SIP into any fund, not even ours, you will make reasonable amount of money and you will not lose money. So there is some bad behavior, and I think that bad behavior will be punished. But there's also good behavior that's happening. Since I joined the industry, which is not that long ago, the SIP book has gone up 4x, 4,000 to 17,000 crore. So there's also good behavior. For your interest, I should tell you, we were talking about Nari Shakti, so we were looking at some of our funds and the man-women.
Yeah.
If you look at some of the small cap funds, etc.,
Is women
men dominate. But if you look at some of the more balanced, advantage, moderate kind of products, women have a higher percentage
it's always
allocation.
balancing.
No,
Women's
Radhika,
dominate.
actually, that's exactly the point I made
Women
before
are
you.
actually more responsible investors, is the point I'm
course.
making.
Before you walked into the studio, that's exactly the point I made. It's very important to bring in more women into the marketplace, particularly mutual funds, because they think balance.
Yeah.
They are not
And
into
safer,
today's
yeah.
They are not into today's return, tomorrow's return, day before yesterday's return. So the balance is very important.
By the way, a big contingent of people who, we discuss startups, a big contingent of people who watch Shark Tank are tier 2 India women and mothers and mother-in-laws.
It's inspiration and aspiration is changing. Inspiration and aspiration are translating into reality. I guess these are just not fairy tale stories. You got an idea, there's an opportunity, there's an investor, and there is a market which actually supports you. But before we wrap, thank you very much all of you for just being part of this special discussion. I've personally got very beautiful memories of Bombay Stock Exchange. I used to walk on Dalal Street with my dad, with my uncle. Still remember that whole vibe, that whole feeling. I was too young to go into the entire ring.
The ring.
But
We've seen it on TV.
We've seen it on TV. And what really, there's a big bull which we always symbolizes the growth of India, but there's another installation which I think is there outside BSE, and that nobody talks about, the common man. The bull with the common man.
Yeah.
And that for me is the real beauty of this bull market. This bull market belongs to the common man. There was a time, Aisha, Indian investors would sell and foreign investors would buy. So foreigners were capitalizing a lot on India's growth, but for the first time, this market belongs to the common man. 2021-22 SIP exchanges. So thank you all for being part of this discussion. I think it is so nice to see that what looked like a fairy tale is now almost part of reality. Whether it is Sensex at 72,000 or Nifty at 21,000. Thank you all for very much for being part of this
Thank you.
discussion.
Thank you so
very
much.
टिप चाहिए